Domino's Pizza Stock, ticker symbol DPZ. They presented earnings today and the stock went up 7% as of recording this video. And year to date it is also looking pretty good for DPZ stock. And if we take a quick peek at their earnings, we see that they beat on EPS but missed on revenue. However, the main thing was the 25% increase in dividends and 1 billion in share buybacks. And the dividend numbers look really good. These numbers aren't fully updated yet because with the new increased dividend yield is sitting around 1.4%. And take a look at those growth numbers. That's a real powerhouse to me. However, if we look at the total returns in the past 5 years, we see that DPZ stock did underperform the S&P 500 in the past few years. So could this be the perfect time to buy DPZ stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. And more importantly, which price target is the most justified in my opinion. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does DPZ do? Domino's is a restaurant operator and franchisor with nearly 20,000 global stores across more than 90 international markets. The firm generates revenue through the sales at company-owned stores, royalty and marketing contributions from franchise-operated stores. Domino's is the largest player in the global pizza market, ahead of Pizza Hut, Little Caesars and Papa John's. If we dive in the earnings report, we see that sales increased 4.9% in the fourth quarter. And for the full year of 2023, we're looking at 5.4% growth year over year. US same-store sales was reported at 2.8%, and for the full year it is sitting at 1.6%. And to me, this is a really important number. For Domino's, it is very easy to generate more revenue by opening new stores. However, you want the existing stores also to grow in revenue. International same-store sales was reported at 0.1%, which is a bit of a disappointing number to be honest. Global net store growth sits at 394, which is pretty good. And income from operations was reported at 3.4% growth year over year, meaning margins are increasing, which is very nice. But the main thing is of course the 25% increase in dividend to $1.51 per share and $1 billion in share repurchases. In here we see the numbers one more time. Revenue is increasing quite decent year over year. The same store sales growth in the US is looking really good for the company owned stores. Franchise is a little bit lower and international doesn't look that good to be honest. In here we see that US company owned stores gross margin is decreasing year over year, which is something that I don't like of course. Earnings per share is up 1.1% year over year, which also feels like a low number. And the main reason for the gross margin to decrease is the higher labor cost as a result of higher wage rates and insurance costs. What I think is very interesting is the long-term guidance from 2024 to 2028. Domino's expects to deliver a 7% annual revenue growth and 1,100 global new stores growth. Annual income is expected to grow 8%, so a little higher than the 7% revenue growth, meaning margins are increasing. And now that we know a bit more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Domino's stock is a 16.3 billion market cap company. PE ratio is at 31, indicating they are trading at a premium price right now. Later in this video I will show you my 3 price targets for DPZ stock, so make sure to watch until the end. And in the meantime, please let me know your thoughts on the current valuation on Domino's. and I'm also interested to hear your thoughts in general on this company. Revenue is at 4.47 billion, and in this graph we see that revenue went up really steady and consistent. The interesting thing is that in the most recent quarters revenue was decreasing. With the new numbers of today it is increasing again, which is very nice. Margins are going up in the long run, which is something that I really like. They took a small hit in 2021 and 2022, but are increasing again, pretty nice from here. It's the same story with the EPS. To me, this looks pretty good. Analysts have a positive feeling for the EPS in the coming years, with 8 to 14% EPS growth per year. In 2027, they think things will slow down a little bit. For the revenue, it is pretty much the same story, but with lower numbers. We're looking at 6 to 7% growth per year, and in 2027, it is expected to slow down again. Return on assets is sitting at 28.5%, which is a great number. Return on equity looks really bad, and the most important number, return on invested capital, is sitting at 51%, which is a really great number. Current ratio is at 1.41, which is a decent number, nothing really special to mention here to be honest. Right now Domino's has 5.3 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. DPZ has 295 million in total cash, so they can't pay down a big chunk of their debt. This is something that I don't like, of course. So it is very important that free cash flow is growing, since this is used to pay down debt, but also to buy back shares, pay down debt, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is looking pretty good. In 2022 we see a big decrease, so definitely keep an eye on this number. Shares outstanding are decreasing, which is something that I really like, especially after today's share buyback program. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 1.4% and not the 1.12% we're seeing here. Seeking Alpha didn't update the new numbers yet. This also means that annual payout is increasing due to the 25% increase in dividends. Payout ratio is around 32% and I prefer 50% or lower. So right now they have 68% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at 17%, which is a great number. And keep in mind, today's 25 increase isn't included yet. On top of that, they increased the dividends for 10 years in a row, which is really nice. In here we see the dividends paid since 2012. You see that DPZ did increase the dividends at a high pace. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that payout ratio is increasing, which is something that I don't like, of course. However, it is still at a really healthy level, so it doesn't worry me at all. In this graph we see the expected dividends in 2024 and 2025. Of course, this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase at a similar rate versus previous years. And overall, these dividends look really good to me, but how about the historical returns? I decided to compare DPZ stock with the overall market, in this case the S&P 500. Next to that I added Darden Restaurants and Wingstop. On the 5-year chart we see that Domino's underperforms the S&P 500 with a tiny difference of only 5%. In total, DPZ returned almost 93% including dividends, while the S&P 500 was sitting at 98%. Wingstop had by far the highest return with 463%. On the 1-year chart we see that Wingstop had again the highest return, but Domino's does a great job here with 58% return, while the S&P 500 is sitting at almost 30% return. On the 6-month chart it is again Wingstop with the highest return, and DPZ and the S&P 500 are pretty close with 14 to 15.6% return. On the 1-month chart it is again Domino's that is beating the S&P 500, but Wingstop had the highest return again. Bottom line, in the past 5 years, the S&P 500 was the better choice here versus Domino's. But Domino's did a great job in my opinion. So could this be the perfect moment to buy DPZ stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth, I'm filling in 3, 5 and 7%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin, I'm putting in 12, 13 and 14%. For the free cash flow margin, I'm putting in the same numbers. For the PE ratio, I'm putting in 20, 22.5 and 25. For the price to free cash flow, I'm putting in the same numbers. I think they do not have a big moat, but they are capable of growing at decent numbers while being the biggest pizza chain restaurant in the world. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now, Domino's stock is around $458. I hit analyze and we see a lot of red numbers. We have a low price target of $215. We have a mid price target of $291 and we have a high price target of $392. And to me, the high price target is the most justified here, meaning the stock is still overvalued based on these numbers. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on Domino's is that I love the company, don't get me wrong, but the stock looks overvalued to me. And I have been analyzing the company for a while now, and every now and then, and it always comes back down to the same problem. Revenue isn't really hit double-digit numbers, and the current valuation is a little bit off, meaning you pay a premium for the stock. Most fundamentals look pretty good, and I do think they can still grow a decent amount in the coming years. From a dividend point of view, I really get excited. I think it is a great dividend growth stock and today's increase of 25% backs that up. From a value point of view, I don't get excited that much. They look overvalued by a decent amount, even with the high price target. So for now, I'm waiting for the stock to come down in stock price, and in the meantime, I will be analyzing them from time to time. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.